Now, Steve, one last thing before you take off here. Silver has declined sharply after hitting all-time highs earlier this year. Are the drivers behind silver's weakness fundamentally different from gold? And what does that divergence signal about industrial demand versus monetary demand?
Yeah, they are a bit different, right? So I think that probably the biggest difference would be that you don't typically see large amounts of sovereign buying that you see in the gold market. I think what you're seeing now is a lot of the volatility that's coming into the market is coming through derivatives, so things like futures and options. But when you take a step back and look at the fundamentals, and you mentioned the increased industrial demand, that is one of the aspects that's really driving silver markets. And in our view, the fundamentals remain strong. If you were to look at the last 6 years of silver, we've actually been in a deficit each of those years. And going back even further to about the middle part of the last decade or so, we've actually seen supplies decrease by about 4%. So we're in a market here where we're seeing decreasing supply, increasing demand. This short-term volatility that we're seeing, we don't expect that to have a long-lasting impact on the long-term outlook for silver.